Good morning, everyone, and welcome to Daily Rates Live with the Mortgage Calculator. Give us just a few moments here to go live on all the different platforms. What we're going to do here today is go through our live mortgage rates like we do every morning, and then we're going to do a deep dive into mixed use property loans. Great program and topic here for today to go over. Hope everybody had a great weekend and is ready to get back to it here. So looks like we're live on all the platforms. We'll go ahead and get it started here. Go ahead and drop a comment there in the chat as you tune in. You can also drop any questions you have in the chat after we go through our deep dive topic here today. I'd be happy to answer them. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few different programs, and then we do a deep dive into a different loan topic. And today's topic is going to be mixed use property loans. So Jose will take us through some really cool options that we have here at the Mortgage Calculator for mixed use properties. But first, let's check out the rates. So Nick, if you're ready, let's go ahead and pull up today's rates and see what they're looking like.
All right. News continues to be good. So we love to see the rates as they continue to go down. New 1-year lows across the board. It's definitely a good day here. We will compare all of our programs for today. It is just after 11 a.m. Eastern. So all of our initial rate sheets are live for September 9th today. And we'll set up a basic scenario and compare the APR across the programs. If you'd like a full breakdown and itemized loan estimate that itemizes all the fees, please get with one of our loan officers. They'd be happy to help you out. For the demo, as we do every day, we'll set up a standard scenario, single family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan, 20% down payment. We'll set everything to a 760 estimated FICO and an estimated 40% debt to income ratio. So let's check out the rates for today. Absolutely smoking. First up, our 30-year fixed conventional option for a primary home, the most common option people think of when they think of a mortgage. Rates today coming in as low as 5.625, amazing. And final APR under 6 for the first time in quite a while, 5.939, amazing here. Now, if there's any reason our customer doesn't qualify for a standard conventional option, typically the next option we want to quote and compare is an FHA option. FHA does allow more leniency on credit issues and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. FHA coming in today, absolutely smoking, 4.875. Final APR, 5.829. So if our customer qualifies for both, they may consider FHA if they're willing to do the mortgage insurance. And if our customer needs to use FHA, definitely very comparable here. And moving on to our VA for our eligible active service members and vets, absolutely smoking. As usual, rates as low as 5.125. Final APR coming in at 5.402 with a standard funding fee here. And when we compare that across the programs, obviously VA is going to be the best option for our VA eligible borrowers. And moving on to our final standard option here, USDA is only for USDA eligible properties, which are the rural areas of the country. The property is eligible and our borrower is eligible. This is a great option to compare. USDA coming in today, 4.99. Final APR with all the fees, 5.705. So if our customers shopping in those areas, they're going to be comparing to an FHA. The USDA is going to be a touch cheaper, and obviously a touch cheaper than conventional as well. So great option for those customers in those areas. And that rounds out the standard options that any banker lender has. And if our customer doesn't qualify, unfortunately, many banks have to deny them. That's where we love to present our 5,000 additional options, starting with our non-QM AltDoc. So if the customer doesn't qualify for conventional using 2 years of tax returns and standard income documentation, we can switch to alternative income docs using this program, using bank statements, 1099s, asset-related programs, all kinds of different options we went over last week. Rates as low as 6.125 today for a bank statement option. Final APR 6.450. So as usual, we're within about a half a point of conventional here to switch to using AltDoc. So great options for our customers that need to use them. And we can also use AltDocs in all of our other programs for investments. Tons of flexibility. First up, our AltDoc option. So bank statement are similar. Rates as low as 6.75 for an investment property. Final APR 7.080. And let's compare that to the other investment options. So we do have our conventional 30-year fixed option. There are no government options for investment, so no USDA, FHA, or VA. But conventional comes in today, 6.5 rate. Final APR 6.838, beating our AltDoc option by a touch. but not beating our favorite options. DSCR is smoking today. DSCR stands for debt service coverage ratio, no income needed, no employment information needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the estimated expenses, aka the property cash flows monthly. That's a ratio of 1 or higher, which is preferred. We set the ratio to 1.5 for these demos here so we can see all the programs. And first up is our 3-year prepayment penalty option, which is the most common. Rates as low as 6.375, final APR 6.682, beating conventional, absolutely amazing. And we can even add a 5-year prepay to some of our programs to make it even sweeter. Rates as low as 6% with a 5-year prepayment penalty, final APR 6.321, which is beating conventional by almost half a point, absolutely amazing. And our final DSCR option here that we do in our live demo at least is our no prepayment penalty option. Some states don't allow it, and some customers prefer not to have it. No prepayment comes in today at 6.75 rate, final APR 7.080. So notice that's a touch higher than the conventional, but most investors would prefer a DSCR loan, even at a much higher cost, let alone a very comparable cost. And the final 2 options we always go over in the live demo here is our 30-year fixed second mortgages. Second mortgages are an alternative to a HELOC, which is traditionally the only option for a customer to get cash out that has a low rate first mortgage and doesn't want to touch that first mortgage. So instead of using a HELOC, which is a higher rate and adjustable, we can do our 30-year fixed second mortgage for a primary home, get cash out rates as low as 8.375, final APR 8.786, which is a much lower rate than a HELOC. And these are non-QM programs, so I could use bank statements and similar. And same program for investment properties. HELOCs are even rarer for investment properties. So we can get cash out with a fixed rate second mortgage, rates as low as 9.5, final APR 9.739. That's a touch lower than it was last week as well. So improvements all across the board. Absolutely amazing. But let's get into our topic for today, which is a subset of our DSCR, our favorite loan programs. We do have the ability to use those for small mixed use properties. So Jose, first put the caveats in there, what types of exactly mixed use properties we can use, and then let's check out some live examples.
Yeah, I'm going to share 2 different program options with you, but the main focus, the one we're really excited, is our residential mixed use program, which is a sort of a hybrid program, uses residential DSCR underwriting for what is essential, for what essentially with many outlets would be a pure commercial loan. This gives us more preferred pricing, and it gives us preferred underwriting because first and foremost, we don't have to worry about if the zip code is in a low population density area, for example, as would be the case with commercial loans. First thing they're going to ask you is, what's the zip code or property address? They're going to run it through their program, and they're going to know if they're going to be able to lend on it or not, simply based on the population density and other demographics for the property. Nothing to do with the property's DSCR, borrower's FICO score, or the like. So we're very excited about this residential mixed-use program because it has amazing rates. The only thing to be concerned about when structuring this deal is that at least 50% of the space has to be residential, and also the residential units have to be in the second floor. Can't be first floor residential units, as that would be reserved for the commercial component of the structure. So let's go ahead and share the options with you today. 75% LTV is the maximum LTV for this program. So let's go ahead and share our options with you. We have, and you can see why we are so excited about this program. You have 8.999 is our lowest cost option at par. And we can buy this all the way to 7.374. And I will let you know this is not a brokered option. We are the lender, and we do fund this loan. So 25% down for the residential mixed use option. That is the max LTV. Now, with a 660 credit score, which is the minimum credit score for the residential mixed use option, so LTV is reduced to 65%, hence our interest rate remains incredible at 8.999 at par at 65%. LTV for our 660 credit score, and our lowest rate option 7.499 at a cost of 3.225. So again, 65% LTV, maximum LTV at the 660 credit score option, which is the lowest for the residential hybrid product. Now, to put things a little bit into context here, this is our commercial mixed use option. Now, you will note, and that is not a typo, that we are able to go to 75% LTV on this option at the low credit score for this option of 650. And this is a broker channel option. So 11.365 is our rate option there at 1 point loan discount. There are other rate options at different loan buy downs, but this is the one I chose, 11.365 at a cost of 1 point loan discount. But do note, 75% LTV with only a 650 credit score. Now, below 650, it is possible, but we will need an exception, which may result in a lower credit score. So now for our cash out refinance options. For our residential mixed use product, the maximum LTV for a cash out refi is 70%. And our lowest cost option is 8.874 at par, 70% LTV. And you can buy that down all the way to 7.364 at a cost of 3.225 points. Now, our low credit score option for the residential mixed use product is again 660. And the maximum LTV for a cash out refinance at a 660 credit score, 60%. 8.874 is our lowest cost option at par. And you can buy that down all the way to 7.374% at a cost of 3.225 points. And our last two options will be the commercial mixed use option. I wanted to highlight the fact that this option goes up to 75% LTV. And here I'm showing you the 740 credit scores. You do not need a 740 to reach 75% LTV. I'm just showing you the best rate option that they have at a 75% LTV cash out, which is very interesting. 11.115 at a cost of 1 point for your 75% LTV, 740 credit score. And at a 650 credit score, we are still able to get to 75% LTV, 11.865 at a cost of 1 point. And these are both broker channel options. So amazing options here for our mixed use product, especially our hybrid residential mixed use product that you saw that the interest rates there rival our 1 to 4 unit DSCR property rates.
All right. Thank you, Jose. I do not see any questions here. So we can go ahead and wrap it up with great, amazing opportunities there. So remember, we do this show 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we'll see you all tomorrow with a new loan type. See you tomorrow, 11 a.m. Eastern for the next episode of Daily Rates Live with the